The crypto market is falling today, and just yesterday, I warned everybody with a video in which I basically said, this is getting scary, don't get trapped here. What was the trap about? What can we learn? What did we learn? Well, for the most part, that even though the overarching market right now is extremely bullish, and we are seeing almost every single sign of a massive altcoin season happening right here, the art is to not get burnt out, to not get wrecked too quickly. Why? Primarily because every single market, let's say that we normally go for, stocks, let's say gold and crypto right now, is extending. They're all acting really positively, even though we've got the FOMC meeting coming up in a few days, this Wednesday. As I stated, the more events you've got coming up that could have catastrophic, or in this case, really bullish consequences, the more shenanigans you see most of the time leading up to it. So in my video yesterday, I explained it's not a stupid idea to sell a chunk of the profit you've been making over the past couple of weeks with the scenario in mind that if the market goes down, you can buy back in, right? And there's some option strategies you could go for. Not going into that today. But if the market goes down, you can buy back in. If the market goes sideways, well, perfect. You still have 90% of your portfolio. You can enter at the same price if you wanted to again, or you could just be happy with your profit. Or, and in case the market does decide to move up, well, it's never a bad idea to take some sort of profits. And in this case here, the majority, let's say 80% of your portfolio is still absolutely ripping it, and you just cash some out in the midst. But the thing is, your goal in a whole bull market is never to catch the perfect top. It's to make a lot of money along the way. And I told y'all many times before, the most beautiful part of the crypto altcoin season is the journey. It's not necessarily the destination, because there will be many freaking coins who run like crazy that you'll miss. But the cool part is you can hopefully catch a good chunk of the ride. You don't need to catch it all the way through. I mean, some of the coins that performed really, really well for me were actually coins I sold quite early, right? They did another massive run afterwards. But the thing is, sometimes this liquidity that you make from selling the coin, getting out, allows you to enter so many new opportunities that it doesn't really matter. Anyway, I do not want to claim I had a crystal ball, because even in this video, if you watch it properly, I did ask somewhere like, hey, did you guys fully watch the video, etc.? A lot of you guys said yes. When I saw this comment, I realized it already. XRP finally holding $3 and you get scared. Why? Well, the thing is, logically, in a market like this, when everybody starts congratulating you, when everybody starts getting happy, that's usually when some bad light shines on your face. But I'll counter myself by saying, even though yesterday I gave a little warning, why am I not selling the majority of my positions? Well, because the underlying narrative is still, oh, I'm stuck a little bit right there. I'm sorry for that. But the underlying narrative is still extremely bullish. And that's the thing. For the most part, we are breaking records right now in almost any field. Like, the market is in such a crazy nice position that it kind of feels like, I don't know, I feel like a little bitch, I guess, if I were to start selling all my coins right here. The difference is, though, to take some profit is different than getting out of your positions to wait for the FOMC. But there's a lot of people who got fully out of the market right now, partially because their profits have been so insane, but for the most part because they're scared of these events. And again, for all of you that are wondering exactly what's going on, it's all about this Wednesday. It's all about this FOMC meeting that's going to come out. And it's not as if the results of the meeting are going to be so odd. I mean, we expect the interest rate to be lowered by 0.25%, and there's a very high chance that that will happen. And if that does, well, the consequences of it are quite uncertain. To a certain extent, because the market is already pumping so much, theoretically speaking, these are meant as incentives to, well, theoretically speaking, help with inflation, but not actually in the way in which you think. Because theoretically speaking, right, you're lowering this to boost the economy. And you, for example, don't want the housing market to fall, so you decrease the interest rates. Why? Well, think about it. If you decrease the cost of capital from 4.5 to, let's say, 2% over some time, what you're basically doing is people have less of a propensity to put their money on the bank. Why would they put it on the bank? Because they're getting interest rate. But if the interest rate gets lowered, they are more inclined to spend their money right now. On the opposite side, you're also increasing, theoretically speaking, I say theoretically a lot. Somebody said in the comments, and I realized it now. You're increasing the amount of jobs that will most likely be provided. Why? Because all these companies start hiring because, well, to start a new project, to start a new land mining project, a new housing complex. The cost of borrowing this money is now significantly less, which tends to lead over time to more consumption, more production, and in turn also more inflation as, well, if you're hiring more, then these people perhaps are working more, they're spending more. It all leads to the prices going up. So why is that so interesting then? Well, because in almost any way, this would lead to the market doing even better. But sometimes, just sometimes, that gets priced in where people are buying just in preparation for this major event, which makes them, in a time like today, like the 2 days, 3 days before the event itself, makes them sell because they've had a long time to prepare for this one decision. Now, if I'm looking at my trades, I'm down a couple $100,000 over the past few hours. And to some, this might really feel like stupid. I should have sold everything, especially because of the amount of profit that we're in. And my best response to that always is, if you really want the greatness, you really want positions that are gonna freaking scare an entire army, you're going to have to sit through some volatility. Now, one of the nice parts about the way I do my trading nowadays is the majority of it I'm building over on Pionex. And the nice thing there is that these are all bots that are volatility bots. And that basically means that they make money as the price goes sideways. They make money as the price specifically does these type of shenanigans moves. And well, that's, I guess, a big part of the beauty of how I've set up my strategies recently. If we just quickly scroll through here, if we get a little list of the bots going, maybe you can see them right here. So even though the profit right now is down pretty tremendously, sure, in general, if I were to now look at these grid profits, they've increased by a ton over the past couple of hours. It's just that in P&L, you can see, right, this was actually plus probably 1,000 ADA some hours ago. Right now it's minus 500. But if we take a look at how much it's cashed out, over the past 2 days, it cashed out 55 ADA. In my opinion, that's pretty good for just letting a couple $1,000s ride, letting this make me so much money every single day. It's really one of the best ratios you can get. 80% a year in ADA, meaning if I start with 10,000 ADA, on average, I should end the year with 18,000 ADA. But theoretically speaking, it can actually get a little bit higher over time, especially if the price moves up. Plus, if the market does move up, I would actually also be up in trend P now, meaning I might turn my 10,000 ADA into, let's say, 30,000 ADA over a few months if the market moves up hard. And from let's say 88 cents or 90 cents where I started, it might actually end up being $2 a coin, $10 a coin. So only tripling my ADA is really cool already, because I mean, even if the price went to 1/3, I'd still be triple the coins. So it even out. But then also, because the price increases and the coins increases, that's pretty beautiful, which is why I focused more and more on these coin bots recently. My SOL, my 300 SOL I put in is up 25 SOL. And again, I'm loving this way more than just the normal, just dollar positions. You can see this was in 900 XRP profit, I think like 2 days ago or so. Right now we're plus 1100 XRP. So you can see this is also getting me about maybe 80 XRP a day, something like that. 115 trades, and I think about 0.5 XRP. I'm noticing now in my on my phone, you can see a really easy overview of exactly how much XRP you make. I guess maybe by this logic, you can also see it. Like it's about 0.5, but it's about 0.5 XRP every single sale that it makes. 0.415, 0.42, 0.52, 0.5. So let's say between 0.4 and 0.5. And in this case here, like you can see, if you look at it, it's about 120 times, sometimes more a day. It's already done it about 13,000 times. But before that, the bot was really small. If I'd put the 40,000 XRP in before, and on average we make about, like I just told you, like say half an XRP or so, this would have actually been up roughly 6.5 thousand XRP already. But I only put the majority of it in like 3 days ago. But you can see over the past 2 months, making 6,000 XRP perhaps, definitely not too bad. That would have been $20,000 on this right here. Pretty crazy, right? Especially if XRP goes up even more. And for that reason, I am personally not too worried about all this volatility because it does make my trades do a lot more. On the opposite end, the $1 million XRP trade over on Blowfin and all those, it's not so lovely. But, I mean, from my advice perspective, even though it's not finished advice, it does, things worked out pretty beautifully, and I'm kind of happy for that. In the practicality or in practice, in the real world, why didn't we take full advantage of it? I mean, it's also partially because I just don't want to touch much. I just want to let it all slide because I think it's going to be worth so much more in the near future here. And I mean, it's all temporary. We are now talking about some really, really specific parts. Like, okay, maybe over a very short term, like right now, because of FOMC this Wednesday, which, by the way, is the most important event to watch by far. Everything will depend on that event. And it's still, even now, the market could go down further just because of the FOMC. But I think a few days afterwards, most likely, maximum like a few weeks, we'll see a massive uptick. So even if we crash around FOMC, which has started now, this doesn't have to last long. This could be a shakeout, to just get you out of the market, get you to sell for cheap before they absolutely send it, because I still stand by my previously stated goals and logic, which is they're going to be setting this market hard pretty soon here. But Cred said this, market goes up, which just now happened. This is the final inning, last opportunity ever to escape the freaking underclass and go crazy. I still think that from any risk-reward angle, it makes too much sense to go a bit crazy right here. You may not think so, but I really do believe that. If the market goes down though, no rush, like right now, no rush. Don't get too hastily into crazy positions. Keep some leeway. Risk management first, wait for better conditions. The market isn't going anywhere. I always say it like this, the market is basically permanently up. If the market confirms to you that the up is there, which we got this week, we let's quote unquote double down, right? We go for it properly. If the market shows some signs of weakness, like right now, normally we take that with full force, right? Well, because of major events sometimes blocking your way, like the FOMC, you're a bit more laid back because on that day specifically, sometimes you get these scam wicks, you get these massive downfalls of 10, 15%, for example, in a day. It has happened. And I mean, if you've been in crypto for a while, you've probably seen some even worse shenanigans. I'm going to quickly open one up here. I mean, for example, a few years ago, this is just fun, right? I want some of y'all that have not been in crypto all this time to realize. Here's, for example, when the Bitcoin price went from like 38,000, all of a sudden spiked to 48,000 and then right back in, right? This is what you call a freaking scam wake. And a lot of this shenanigans was happening during the FTX era. A lot of freaking stupid things happened, but there is also, let's see right here, there's also so much fake information and so many people still who, as of this point, don't get with the program. They don't understand that the underlying thesis for the most part is so bullish because if all these institutions, which there are many right now, are saying they're going to be buying billions of dollars worth of coins, why not just follow it along full force and not give up? At the end of the day, if it does end up being a stupid idea, these companies are going to be going down billions and our entire crypto market will probably go to like minus 90% for a long time. I'm willing to take that risk. So I'm going with these companies who are raising billions of dollars to go at it. And I'm going with, for example, Michael Saylor, looking at, which is not a necessity because the price is, let's just say, I'm looking at his liquidation price in theory, not actually doing it, and thinking, okay, if he gets wrecked, Michael Saylor, the entire crypto market is going down 90%. Most likely, this will lead on for a little while. And the main way the crypto market will probably enter a bear market is because the treasury companies and basically the ETFs are everywhere, institutional interest is everywhere, and they're going to be scaling it too much, or they're raising too much, and then on one decline of one specific coin, it leads into a cascade of fear, which causes the market to crash. I still believe that. But since we're not even close to the bubble really being at peak, in my opinion, of treasuries that is, I'm still buying like a madman. Today, this week, bit more scary. Just because of the one new start, right? This FOMC sets the start of rate cutting, which is most likely going to continue for the rest of the year. But it's something that theoretically, say it again, this word, which is in almost any way, shape, or form really, really bullish. But sometimes you see some shenanigans, which is why I'm telling you all, be a bit careful around this one event. But in reality, everything is set for a massive altcoin season. I'm still holding the majority of my coins. It was only nice to sell some coins just for the specific days, these 3 days. Because like I said at the start of the video, in any scenario, if you sold a little bit, you could come out on top afterwards. But these are just my thoughts. Still, if you're holding on, I understand. Crazier times are still yet to come. We're still holding pretty strong. And for the most part, I also like this picture right here. Somebody said, I feel quite uneasy with the market. And to some extent, I agree. But I like 𝗬𝗪 who said, unfollows for your lack of testosterone. Don't be a little bitch, right? That's about it for this little crypto update. Make sure you press the like button if you want to trade. Always got some links down below to the platforms I trade on. For example, Pionex right now, it's working really well, right? It's doing some nice volatility here, which means you make a lot of money on the grid profits. And you know what? That's about it for this little crypto update.